Well, today we're going to be judging the fallout after USDA's slew of reports yesterday. We had the export inspections yesterday. We had the crop progress and condition report yesterday. And we had that big WASDE report that came out yesterday. And it seemed like they all had kind of different impacts on the market. Now, if you missed it, for the production yesterday on that WASDE report, USDA issued their estimate for corn and soybean production in the U.S. And they didn't change their yield at all from what they had the month before. So that means the trade was a little bit disappointed. They thought maybe they would have edged them downward a little bit. That didn't happen. Now, in the afternoon, we got our corn condition numbers from USDA. And actually, we've got all the crop condition numbers. And we had a 1% increase in the corn condition rating yesterday afternoon, up to 65%, good to excellent. Soybeans, though, stayed unchanged at 59%, and I believe a lot of analysts were looking for an improvement in the condition rating there, and it didn't happen. So the market was very confused overnight, and gosh, every time I looked at the markets in that overnight session, they'd be either higher or lower, and back and forth they went. Let's take a look at where they are now. With our quotes provided by bar chart, you have December new crop corn, 3.5 cents higher. We're at 536.5 per bushel now. And in the soybean trade, you know, when I got up this morning, they were actually lower. And now we show a last trade on November soybeans, 8 3/4 higher at 13.59. So they were just all over the place. Now looking at the wheat in Chicago, you had the September contract 6 lower at 6.34 3/4. That would be about a 4-cent range from its low of the overnight trade, and about a dime off our overnight high. Now, September Kansas City wheat is down 6 3/4 this morning at 608.5. And in the spring wheat market, you have that September 4 3/4 higher at 862. And again, the one that garnered a lot of the spotlight in the crop condition report was the spring wheat conditions, which held the same as last week on the good to excellent category. They were 16% good to excellent. But that's not the whole story, because the poor to very poor category in the spring wheat yesterday went from 50% poor to very poor a week ago to 55% poor to very poor this week. So that was a big decline. And gosh, look at that. Washington State, only 1% even ranks a good rating. Only 1. South Dakota, only 3% is even rated good. Let's bring in Chris Swift of Swift Trading in Nashville and chat about all the developments here in the market. Chris, it seems like the WASDE report yesterday had kind of a bearish tone to it, a bearish tilt to it on the corn and soybeans, but it was definitely friendly on the wheat. Then you get the crop condition numbers out, and I think that kind of surprised a few people where it was maybe a little more market friendly. So now they aren't sure what to do this morning. What do you think about all this?
I think they're in the same boat I am. I don't know what to do either. So it's interesting, Marlin, because we do know we have a lot of fluctuation. This crop is not out of the ground yet, and we're coming up on pollination. So I can see how we may keep a little bit of a firm undertone to the market coming into the next 2 to 3 weeks. But more interesting, just to add more confusion onto it, China last night introduced 1 trillion won back into their financial system. So we see this morning that our U.S. dollar is up sharply, consumer price index up sharply. We've still got major inflation going on right here and a lot of money that is flowing around.
So what's that going to do to the flow of money into the ag commodity market, or is it going to cause it to flow out of it?
Well, I would think that it would flow into it for the only reason China is still having issues with their African swine fever. The more that they try to control that by building more controlled environments, the greater need for a clean feed source. And right now, the U.S. is the place for that clean feed source.
Well, I remember in the old days, Chris, when you and I were driving younger cars back then, it used to be the grain was considered a flight to quality for investor money. I don't know if they look at it that way anymore. What do you think?
I'd have a hard time believing that. When you look at the volumes of what's traded in the bond market and the equities markets, the commodity markets are very small still, and one, I don't think they could handle that kind of money, but two, I don't think that you get as many investors out there that are as concerned with commodity prices, or there are also derivatives available to individuals that don't want to trade commodity futures. They can still participate in commodities through various different derivatives.
All right, Chris, we'll come back and talk about our livestock trade here on a Tuesday. Our guest, Chris Swift, will be back after this. We're talking more with Chris Swift of Swift Trading. Chris, after the market reaction and in such a choppy nature following yesterday's USDA reports, how much impact do you think that's going to have here on the livestock trade now?
It'll always impact it, and especially in the feeder cattle market where we see the prices of feeders elevated. A lot of those big Midwestern sales have produced some extremely good prices. We've noticed that reflection in the feeder cattle index, up a little over $7 last week and up over $1 yesterday. So they're really moving a lot of inventory. Probably maybe not quite as much as what they did this time last year, but there's still elevated inventory being moved right now, and it's keeping the flow of animals moving right now.
Do you consider the feeders to be kind of stuck in a sideways pattern right now?
Well, they are. They haven't been able to break out to new highs yet on the front end of it, and so maybe we just keep jostling around. The basis is being converged by the index coming up, and in my opinion, that's a great way to do it because all producers then benefit by the rise of the cattle market, regardless of whether the futures come down or whether they rise. Everybody gets to gain from the physical market moving higher.
Now, the August live cattle on the chart are showing more of a decline here in recent days. Right now, yesterday, the August live cattle finished 60 cents higher. They were at 119.82. But we were looking at the August feeder cattle here, and they were down $1.02 at 158.15. But it continues that sideways formation that we were just talking about. Meanwhile, though, on the lean hogs yesterday, we had that August contract going up by $2.50 and finished at 104.07 per hundredweight. Now, that was within about 30 cents from our high of the day, about $2 off our earlier low of the day. So that was a fairly strong performance there in the lean hog trade. Do you see follow-through buying this morning?
Yeah, probably so, and I hate to be a broken record, but we are just narrowing the basis right now. We've seen the lean hog index right now currently trading at about 109, I think. So with it trading at that level and the future still at 104, yeah, you could see another $3 to $4 in the August hogs to pull back up. And there's an ominous gap that lies up there around the 107 area too. I'm sure a lot of traders in the technical format will look at that as some kind of place maybe the market wants to go to.
All right. Well, thank you, Chris. Appreciate it. Chris Swift of Swift Trading. Tammy, back to you.